In 11 days, Trump takes office in the United States. What does it mean for the economy? And are bond markets, where yields have been going up rapidly, correctly pricing in the effect he will have? Let's get more from Benjamin Tal, Deputy Chief Economist at CIBC. Benjamin, it's great to see you. Before we get into some of your specific calls here, this is Trump's style. He loves headlines. He comes out with wild-sounding statements. Should we take a step back? Or, it is hard to know how much of the stuff he will actually implement.
Yes, you're absolutely right. I think that it's impossible to know what he's thinking. In fact, I don't think he himself knows what he's thinking. I think that we have a situation in which, let's face it, the only thing we know is that his ultimate goal is uncertainty. And the tool is chaos. If you are a CEO of a company and you have to make a decision, invest in the US or invest outside the US, the fog of uncertainty will make the decision for you and you will invest in the US. So the more uncertainty you generate, the more chaos you generate, the better it is as far as he is concerned. So it's not about what he's going to do, it's about what he's going to say that he's going to do. And I think that's extremely important to understand. We have to remember that in the past, he talked the same language and we haven't seen a significant change. In June of 2017, he basically said that he's going to impose a tariff on Mexico if they don't deal with the drug issue, with the immigration issue, with the illegal migrants. And then a week after, he basically said, forget about it. I was joking because Mexico is doing everything is fine. So, he's talking a lot of barking. I don't know how much biting, but of course, nobody knows. We have to take him seriously.
We've seen this big backup in U.S. bond yields. Why is that? Because you say there are signs of underlying weakness in the U.S. economy.
Absolutely. If you look at the bond market, it's crazy what's happening there. September, it was 3.6. I'm talking about the U.S. bond market. The 10-year rate was 3.6. Now it's 4.7. 110 basis point jump. I think most of it is a Trump trade. The market started to pricing in a Trump administration as early as October or September, and it continued to go up. The question is why? Because, again, you don't know what he will do. And let me just make one point. The fact that Trump is Trump does not mean that he's wrong on everything. He's right on the border. He's right on defense spending. He's even right on China. It's just the way he's going to deliver it. That's a different story. But in many things, his policy actually makes sense. That's a footnote. But going back to your question, I think that a lot of the sell-off in the bond market was due to Trump. For example, we're talking about deporting 11 million people. That's supposed to put upward pressure on wages, and that's inflationary. I said that he's not going to touch those 11 billion people. None of them is actually standing there and saying, I'm here. It will be very difficult to find them. The capacity is not there. The issue is not the stock, the 11 million. The issue is the flow. The more difficult you are, the harder you are on the stock, the flow will slow down. And that's exactly what he's trying to do. He's not interested in the stock of 11 million immigrants. He's talking about the reduction in the flow. That's one thing. Fiscal policy, a lot of what he was talking about is already priced in. So I think that the market is exaggerating his fiscal ability in terms of spending. And of course, inflation is definitely under control. And I think that the tariff story will not be as inflationary as perceived.
You said, Benjamin, sorry to cut you off there, he's right on the border, but I've seen commentary indicating that he's exaggerating the number of migrants or illegal drugs coming over the Canadian border.
Oh, absolutely. I think that the issue is Mexico. Canada is really a second-hand smoker when it comes to this business. So I think that he really doesn't have a case when it comes to Canada in terms of drugs and illegal immigrants. I think Mexico is definitely an issue. And the question is what we in Canada do when we negotiate with Trump. Are we negotiating alone or are we negotiating with Mexico? This is a big question to answer.
What about this fear that Trump will run huge deficits and that might be inflationary? What's your thought on that, Benjamin?
Yeah, I don't think so, because again, we're talking about what the market is tweeting about is $7 trillion of excess deficit, increase in the deficit. About 3 to 4 trillion of it is already priced in because it's supposed to be the extension of the personal tax cut. So it's not really going to impact the market at all. And the other $3 trillion, I don't think that Congress will be so easy in terms of allowing him to do so. Remember, there are many fiscally conservative members in Congress in his own party, so it will be a struggle. So I don't see $7 trillion going into the deficit, and therefore I think that the market is exaggerating the fiscal implications of Trump, and that's why the long end of the curve is exaggerating it as well.
And just finally, Benjamin, I know this is extrapolating a lot, but we've heard that Russia and China are trying to move away from the US dollar. They've been buying gold, for example. But is the US dollar's long-time strength as the world's reserve currency, is it in any way threatened?
Absolutely not in our lifetime. Clearly, we see a slowdown in the way the US dollar is dominating the global economy, but it's not something that is going to be significant. You cannot trade on it, in other words. This is not something that will happen anytime soon. I will not short the US dollar anytime soon.